South Korea is the world's largest jet fuel exporter. It also makes the chips that power everything from your smartphone to AI data centers. Both industries are still reeling from the fallout of the Strait of Hormuz closure, and the damage isn't over yet. To understand just how serious the threat is, let's first break down just how critical these industries are. First, jet fuel. South Korea is the world's largest exporter of jet fuel, which is a crude oil derivative. It exports nearly 30% of the entire global market. 69% of all American jet fuel imports come from South Korea. The model is simple. Import crude oil, refine it into jet fuel, and sell it to the world. But that model has a vulnerability. 70% of South Korea's crude oil comes through the Strait of Hormuz. During the closure of the strait, only a fraction of what the industry needed actually arrived on shore. After the ceasefire, the flow has not yet returned to its normal pace. Next, semiconductors. Semiconductors account for 25% of South Korea's exports, the country's largest export commodity. South Korea's chip manufacturers produce high-bandwidth memory chips, or HBM, a specialized chip that AI systems need to function. These companies control roughly 88% of the world's HBM supply. So what does the war in the Middle East have to do with chip factories in South Korea? Helium is one of the answers. Helium is used to cool the extreme ultraviolet lithography machines that etch circuit patterns into wafers at nanometer precision. It is essentially a chip printer. Helium is the semiconductor industry's largest gas input, and there is no substitute for it. South Korea sources nearly 65% of its helium from Qatar's Ras Laffan industrial city, which in March was attacked by Iranian ballistic missiles, causing extensive damage. Qatar Energy declared force majeure and reported damage that will take years to repair. And unlike crude oil, liquid helium can only be stored for about 45 days before it degrades, making stockpiles a short-term fix.
Helium in general, like if you don't have it and there is a shortage, then the production cannot occur. So this is critical for the global supply chain of semiconductors because South Korea is one of probably the only manufacturer of advanced memory chip at the moment that is used for AI.
And it's not just helium. South Korea's chip manufacturing also relies on low-cost electricity, partly powered by liquefied natural gas, or LNG, and critical petrochemical products derived from crude oil, like naphtha, to make solvents, thinners, coatings, adhesives, and plastics for the chips. Importantly, the majority of these inputs are imported from the Gulf. Speaking of petrochemicals, South Korea has a massive petrochemical industry that provides crucial intermediary components for other major industries. In fact, it's the fourth largest in the world. And again, crude oil and naphtha, 54% of which South Korea sources from the Gulf, are critical feedstocks that keep the industry running. That's why disruptions to the Strait of Hormuz could trigger knock-on effects across both domestic and global markets.
Because the petrochemical industry, it has ripple effects on everything that is consumed by consumers. So this inflationary pressure will be pretty significant. And I do believe that it will become like a kitchen table issue when the inflation rate in South Korea hits 3% or higher.
With such vulnerabilities, Seoul responded quickly. It secured 74.6 million barrels of alternative crude for May, cutting Middle East dependence from 69% to 56%, with U.S. imports surging more than 25% above last year's average. At the same time, South Korea has bolstered its energy cooperation with Japan on LNG procurement, crude stockpiling, and petroleum product swap arrangements. Seoul has also lifted coal power limits and accelerated nuclear power restarts. It capped refined product exports to protect domestic supply. South Korean President Lee has proposed a $17 billion emergency budget and a record release of 22.5 million barrels from the IEA's reserve. South Korean chip manufacturers have secured long-term helium agreements with U.S. suppliers.
Industries that are deep-pocketed, like AI firms, will be able to go out and pay a premium for certain things.
TAG's geopolitics experts partnered with our data science team to build a proprietary AI simulation that modeled the behavior of key geopolitical actors in South Korea. What that simulation found is that the country managed extremely well until about mid-September. That's when the margins had eroded and things became much more difficult in the fall and winter.
A lot of the LNG and crude oil related measures are emergency measures, as you mentioned. They have emergency reserves and they have made immediate diversification efforts. Once it hits into like the 6-month mark, I do believe that this will become a lot more structural.
If the volatility at the Strait of Hormuz persists, South Korea would be pushed into a lower growth and higher inflation environment. That means more expensive electricity, gas, and basic goods, leaving households effectively poorer and spending less. That economic pressure would also spill over into politics. The Blue House and the National Assembly could face some tension in shaping an appropriate response, as repeated fiscal relief measures could surface differences between the ruling party and the opposition. Make no mistake, this isn't just Seoul's problem. Countries that depend on South Korea's exports of jet fuel, petrochemical products, and memory chips would also bear the brunt. That includes the United States, Seoul's ally and one of its most critical trade partners.
I do believe that at the moment, the Koreans don't necessarily link the situation in the Middle East with the United States per se. But at the same time, there has been a little bit of an erosion in bilateral trust. There is a misalignment between the two countries in terms of what they see as the security guarantee by the United States as well. So we have seen some erosion, and if this continues, it might add on to all those issues.
As the volatility in the strait persists, the crisis has revealed just how vulnerable South Korea is when the arteries of global trade come under pressure. And in an era of increased geopolitical competition, that risk exposure is here to stay. This video is part of the No Safe Harbor series by the Asia Group, a report on the consequences of the volatility at the Strait of Hormuz for economies in Asia. You can watch the rest of the videos here and read the report at straitofhormuz.theasiagroup.com. Thanks for watching.